Good morning and welcome back to day two of the Intrafish Seafood Investor Forum. If you were lucky enough to have joined us yesterday, you saw a fantastic couple of panels. We hit on some excellent topics, and we heard about private capital's role in the seafood space. We heard about land-based aquaculture and the promise and perils of that sector. So today we're going to keep the discussion moving. We're going to talk about M&A synergies, and we're going to be inviting some fantastic guests to talk about what the future of the seafood sector might look like in terms of tech and innovation and other exciting things coming down the line. So first off, want to thank Antarctica Advisors. They are our sponsor for this event. You'll be hearing from them in just a moment when we start our M&A discussion and panel. But before we begin today, we're going to do a little bit of a macro outlook on the seafood and ag sector. And we're very, very lucky that we have Michael Swanson. He's the Chief Agricultural Economist at Wells Fargo. And Michael, welcome. We're going to ask you to look into that crystal ball and tell us a bit about what the seafood sector might be in for. It's been an insane year, I think it's safe to say, for the agriculture and seafood sector. So many changes that have happened and more to come. So yeah, I'd like to just start off asking you that. What can we be expecting here in the new year?
Well, you know, I guess you can always make lemonade out of lemons, which is the old saying, of course. And one of the things I think is going to happen from COVID is a lot of people have learned to cook fish at home. You know, one of the laments of the seafood industry in the United States, at least, has been people pay more money when they eat fish outside the home, of course, where it's marked up 4 times on average. But I think the industry having to pivot to the supermarket on the IQF, individually quick frozen segment, has convinced a lot of people they can cook very good fish at home and enjoy it at a much more reasonable price point than they typically pay at some of the higher restaurant prices they pay outside the home. So I think that's going to be something that's going to actually be a positive outcome as the industry continues to explore that healthy, easy to prepare option at home to hopefully get more seafood on the table. Because let's face it, fish in the United States is a very low % of the protein at this moment, and we'd love to have better penetration.
So tell us a bit about how that might impact pricing and how that might impact what consumers are willing to pay for seafood. I mean, one of the things that you've spoken about in the past is how seafood competes with other proteins, poultry and beef. And that's been one of the challenges, right? It is a premium price, or several of the most popular species are, compared to some of those other proteins. So what might we expect in terms of inflation on prices, if any?
Well, you know, if you look at pork and poultry, which are the 2 primary competitors on the low end, beef has become somewhat more of a premium product. Unfortunately for fish, we just have to acknowledge corn and soybeans are going to stay cheap. At the moment, we had a little bit of a run up, but when you look at the futures contracts into 2024, corn's under $4 a bushel on the US market. That indicates that poultry will be cheap and pork will be cheap. So we do have to acknowledge a lot of competitive pressure out there from this market. But we shouldn't try to match up against those markets straight up protein for the daily plate. We should say, hey, this is healthy protein for the daily plate. Less waste, less prep, all those things the consumer wants. The consumer wants easy, they want healthy, and they want variety. And fish and all the seafood products really can play on those 3 elements that are really strong in this market.
So, Michael, give us just a sense of what's happened since April, since the lockdowns really occurred in terms of both seafood and the other proteins. So, we all know the food service industry collapsed, but just in a macro sense, what's happened to the protein segment?
Well, you know, let's be a little more nuanced about the food service sector. When you look at the quick service restaurants, the QSRs, as they call them, McDonald's or the drive-through category, they're almost recovered almost completely in many areas. Even in areas with lockdowns, people are willing to get in their car and drive through a drive-through to get their food. Now, it's the white tablecloth high-end restaurants where we've seen a lot of the higher-end seafood being moved, are the ones that are still struggling. So I think it's interesting. We have to penetrate more in the QSR if we want bigger volume there. But of course, the price points have to be lower. It's more of a pollock market than it is a halibut market, to be sure. And so, but when we think about that, 2021, as the vaccines do get rolled out, and they will be, because we know we've already seen some of them being approved. We know that the white tablecloth restaurant category will probably be the slowest to recover. But once it gets going again, it will probably be additional because we'll already have good growth in the other channels. So I think it's, like I said, it'll be positive. Once we get back to white tablecloth, we will see incremental demand in those higher end categories.
So what's Wells's view on sort of other countries and their economies, in particular on the ag sector? Let's take a look at China, for example.
Well, everybody looks at China, and African swine fever, of course, is the premier issue at the moment. They are busy rebuilding their swine herds, which pork is the single largest protein in their market. Now, it won't be the same China that it was 2 years ago. They're going to go to a much more industrialized, confined animal operation, higher efficiencies and higher investments. But it's going to be a very interesting dynamic as they rebuild that herd. We're seeing good demand for soybeans from around the world. We're seeing good demand for U.S. corn to support that regrowth. And the market's very strong right now. But once they have that pork built back up, there will be competition from that within a market like China and Vietnam. Vietnam and China are kind of very much siblings in that sense right now.
So one of the things that we'll be talking about today and spoke of yesterday is consolidation, and in particular, the seafood industry is pretty far behind on beef and poultry and pork, it seems. So, but tell us a bit about that sector and what's happening there, because we've seen some big deals that have occurred. And do you think the pandemic and sort of the struggles that some sectors have had, will that lead to consolidation in those segments? Is there room for consolidation in the other proteins?
Yeah, I think consolidation is going to be driven almost more by the club store, superstore phenomenon. If you look at the USDA's food at home spending, the single biggest structural change over the last 20 years has been supermarkets losing market share to the Costco's, the Sam's Clubs. And what do they want? They want, from top to bottom, professionalism, where they can look ahead 6 months, 16 months. They want to look ahead a far away, and they really want that ability to deliver product all the time at a price point they want. I think we're going to see more and more of that pushing consolidation, as well as just the fact that with IT, with technology, with capital scope, you will just see more consolidation because it makes sense. But the consumer wants to get their food through that super center or that club store, and they want it consistent. Nobody wants to go into Costco and find their favorite food not stocked that day because somebody had a bad day at their processing facility. Costco doesn't like it, and when Costco doesn't like it, you don't do it.
So we've seen in other countries, in the UK as one example, where we've seen protein companies take on both a land-based and seafood. That type of integration hasn't always been a success. Conagra tried it in the past a few decades ago, but it's a very different landscape now. Do you see any case, or do you see it happening that we might see large major protein groups, so combining aquaculture, combining land-based proteins? Is that something that you think companies can balance and handle?
It would make sense. Somebody like JBS. JBS wanted to be big for the sake of scope, which is always very surprising for an investor, because investors want to talk about returns, not just size of operations. So somebody like a JBS might want to add seafood or aquaculture into their offering to be a one-stop shop. But to your point earlier, it's about execution. When people look at different segments, what they don't understand typically is that the premier operators in that segment have a 3x return on assets versus the industry average. I mean, that's pretty standard. 3x over that industry average. But it's their focus, it's their management skill set that brought that high return, not the segment itself. And so you always see people chasing that, and then if they don't bring that magic with their management, they're disappointed with the industry when they should really be disappointed with themselves. Now, senior management's never disappointed with themselves.
Right, exactly. So, so that said, what do you think the challenges are that are different in seafood and aquaculture in terms of that execution that you discussed that's different from land-based proteins? Why is it that that is maybe a more difficult hurdle than people think?
Well, it's interesting because the aquaculture is much closer to the land-based. Well, it is land-based, but it has the same dynamics. You have to buy the feed, you have to care for the feedstock, you have to, program it ahead of time, and you have to have a lot of capital at play all the time. The wild catch is interesting. I mean, we talk to a lot of our processors, and they love wild catch because when it works in their favor, it's great. If it doesn't, well, they just wait for next year. They kind of have that attitude. You can't do that as a poultry producer, as a pork producer, when you have a $2 billion facility to keep feeding animals on a daily basis. And so it has completely different mindset. So I think some of the big protein companies could do well in land-based aquaculture. I think they would find wild catch with quota and government a hard transition to make some days.
So, so there's this discussion of a K-shaped recovery, or pick the letter in the alphabet. Everyone has a different opinion on what kind of recovery we might see. Some say that as soon as this vaccine rolls out, we're all going to go out and eat and party and go to the movies and have an amazing time and throw our money around. What's your view on what we might see once the vaccine rolls out? Are we in for kind of a slower, gradual recovery? I mean, obviously there's businesses that have gone bankrupt across the world, in particular food service. People have been really hit hard by this. Consumers have been hit hard. So what's your view on what we might see here once these vaccines roll out?
For the food consumption side, it's a little bit different because we've seen about $20 billion swap between at-home spending and food service spending. And obviously those that are more focused on that supermarket spending have done very, very well. We've talked to a lot of customers who they really don't want going back to the way it was. I mean, because they get advantaged by $20 billion a month of additional revenue through that supermarket chain that's in their sales component. To your point, as the vaccine becomes more and more widespread and people go back to that, I want the convenience of eating out, they're going to see that advantage erode. Now, how quickly, that's the real question, because they're asking themselves, should I spend money today on facilities? Should I spend money assuming this will be 12 months or 24 months? And I don't think so. I think it will erode probably a couple $2 billion per month over the next 12 months until it's back to that 50-50 split in the United States. And that's really more important than the overall macroeconomy. Where's the channel and what's your share of the channel?
So unfortunately, we have to wrap up here in a minute, Michael, and I wish we could talk longer, but in the interest of time, we're moving things along here. But if you were to give advice, we've got an audience here of seafood companies, an audience of a lot of investors and others as well. But if you were to give some advice for how seafood companies should be preparing for 2021, what are some of your thoughts there?
I'll just go back and reiterate that we will see a recovery in white tablecloth dining, which is high end, which has been very profitable, but it's going to be a longer, slower recovery. So if you're going to play the cards, just assume that the supermarkets are going to still be strong for the first half of 2021. IQF, ease, prep, all those things that you've seen succeed already will continue to succeed. There's no reason to believe that they're going to suddenly lose that luster that we've seen in this segment. So I would not be betting on a real fast recovery of the white tablecloth industry until second half of 2021. And with that, kind of prep your cards accordingly.
Great. Michael, thank you so much for taking the time. Really appreciate it.
Thank you. Have a great day.
Thank you.